Now that we know what a trading strategy is based on, it's time to find out what it consists of. A typical trading strategy is based on 3 key decisions of any given trade. First, the precise entry point into the market. At what point does the trader decide to open a position? Second, the precise level or levels to take profit. In other words, when you close a profitable position. Third, the precise level or levels to exit or close a losing position. Traders base their ideas around these 3 key decisions, but many fail to formulate a blueprint to realize them fully. Step 1. Decide on the trading style you are comfortable with. Are you a trend follower, a contrarian, an intraday trader, or a long-term trader? Step 2. Formulate the rules of the system. Set rules around the 3 key decisions. What are the conditions to buy? What are the conditions to sell? What will you do if the market moves with you or against you? Write all of these rules down. Your trading system should have clear and repeatable instructions. Step 3. Test the system. Start with a visual inspection of historical price charts. Scroll back and forth on the price chart. Check whether the system appears profitable. If the results look promising, test more thoroughly using larger amounts of data and various financial instruments. Step 4. Backtest the system. For those with programming knowledge, trading bots can make backtesting very useful. The reports can reveal information about profit factors, average losses, wins, and other important performance statistics. Step 5. Forward testing. Once you have a clear system with its own rules, forward test it before investing your money. A popular way to do this is by trading on a demo account. You will see how the system behaves in a real trading environment using live prices, allowing you to make necessary adjustments. By following these steps, you can build, test, and refine a trading system with clear rules. There's one more important topic to cover in trading basics: risk management. Stay tuned. Learn to trade consistently. Master the financial markets with Brit Online Trading Academy. Subscribe for more.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.